as you know, the Brits, care about nothing really except, their houses. And I think I'm right in saying that, this not only was the death knell of the Liz Truss government, but I think around this time, the Tories, lost any sort of they collapsed in the polls relative to Labour. So you could say that bond market crash induced a fundamental shift in political direction.
For the wrong to rule, the good must just stand idly by. Hello and happy Sunday. Now, those of you who know me well know that I am absolutely dreadful at maths and anything to do with numbers, so you have to bear with me. So I'm very fortunate this week to be joined by Edward Chancellor, who's an author and a very prescient one at that. He predicted the dot-com bubble, and he has now written a book that came out this summer called The Price of Time, about interest rates and the effects that they're having on our society as a whole, and have done over the history of mankind since day one. Edward, lovely to see you. Thank you for joining me.
Yeah, thanks for having me, Laurence.
Why are you interested in finance and money? What interests you about it?
Well, I had to get a job on leaving university, and so I thought I might as well make money from money. In other words, going to the city, and I did that. And then I had been a historian at university, and I sort of got drawn into the historical aspects of finance, and later, then worked as a financial journalist, and then as an investor for an investment firm in Boston. So I've been sort of doing that for roughly 30 years.
And in terms of the book, it focuses around interest rates and stuff like that. Can I just ask a really stupid question, which is, why do we have interest rates?
Well, it's not a stupid question. The book, really the book is trying to answer that question. And the first thing one observes is that interest has been around for 5 millennia. And it's extraordinarily unlikely that we would have any institutional or financial practice that was that long lived unless it was serving some function. And if you see in the earliest etymologies of the word interest in the ancient languages, Assyrian, Greek, Egyptian, they're always linked to the productivity of livestock, to to the offspring, to the calves and kid goats and the like. And so there is a very early relationship between a loan and the productivity of the loan. But as I elaborate in the book, interest serves various functions, absolute vital functions. It's used for the valuation of assets. You can't put a price on a bond or a house or a share or anything that really lasts for any period of time, a picture, without actually in effect having an interest or discount rate to get to a current value. It determines the allocation of capital, what we call a hurdle rate or a payback period. So, your decision whether to invest in something is determined on the likely return relative to the cost of capital or the interest rate. So it determines how money is invested, and obviously the better you invest, in a way, the higher the hurdle rate, the faster economic growth would be. It determines, one definition of interest is the price of risk, or the price of anxiety, as some 18th century writer called it. And so you need to put a price on risk, because obviously if you have no price on risk, then people will take on too much risk and you'll have all hell to play. It's an inducement for saving. So one of the 19th century definitions of interest is a reward for abstinence or for waiting. And that's quite an important thing to think about, is that humans are naturally impatient. So are you aware of the marshmallow test for children? So the marshmallow test was something developed in the 1960s, uh, where children were offered a marshmallow, is by a Stanford psychologist. They were offered a marshmallow now, or they were offered the opportunity to wait for half an hour, and then they would get two marshmallows. And if you would, the second marshmallow is a reward for waiting, or an interest rate, if you will. And so the amount some people believe, and I think it's probably true, that we all have what's called time preference. We're all, or a simple way of putting it is, we're all impatient, and um, and the interest rate encourages us to show some patience. In other words, induces us to save and invest, and with the inducement of saving investment, we then get economic growth and so forth. So the other way, if you bring this all together, a friend of mine, a financial historian, says that interest is the universal price. It ex- or a famous American economist called Irving Fisher said it was an omnipresent phenomenon that you can't get rid of. And one of the reasons I wrote this book was to ask your question, to answer your question, why does interest exist? And then, having established through the arc of history that interest is an absolutely vital phenomenon, to then say, well, what is happening in this world where, for the first time in 5 millennia, the central banks took interest rates to zero and turned it negative in Europe and Japan. So the book is called The Price of Time, because interest puts a price on time. And as Ben Franklin said, time is money, and we need to use our time well. We are mortal. And so you can imagine then that a world of negative interest rates is a world in which the clock is actually turning backwards, and it's an Alice in Wonderland world. And that really is what we've seen developing, both in the real economies, the sort of the sclerosis of the real economies of economies. So, Britain, for instance, since the global financial crisis, I think has had the lowest productivity growth since the Industrial Revolution, and that creates all sorts of problems. People say the rise of populism is to do with sort of you know malcontents, but in fact, actually, there's a discontent with economic performance. But also in the financial world, we've had this incredible bubbles and an incredible inflation of asset prices. And as you're aware, it's much harder for younger people to get on the housing market. And there is, and I have a chapter in the book in which I argue that the inequality that people make uh, a fuss about and supposedly want to do something about is to a great extent a function of these very low interest rates, which pushed up, and we're so used to it in England, particularly in London, of those of house prices being at at many multiples of a person's income. But if you inflate all these asset prices, it makes it much harder for a person setting out in life to accumulate capital, to save for their retirement one day, and even to buy a house. And if you don't give people a stake in the system, then they will turn against the system. So I think that you can, to some extent, see the sort of discontent of capitalism is really not to do with some sort of sudden recent failing of capitalism, but the fact that the monetary policy makers have distorted and corrupted the system.
So that's why yes, exactly. So, and why therefore sort of political leanings will shift and panics will set in with younger people. If they can't afford to buy a house and they don't really have a future and they don't believe they have one, then they need to, then of course they're going to lean sort of heavily socialist and also start believing in climate catastrophes and things like that, and it will affect you emotionally. But I think what was interesting, what you said at the beginning, that the origins of this 5 millennia old, and that excuse me, that you would lend someone some money, say to buy a goat, and if the interest would be that the goat then had 2 kids, then that system seems to work, doesn't it?
Yes,
That you're
Laurence, so one way of thinking of this is that if you have a piece of private property, possession, whether it's a farm animal, a house, or you name it, you're not going to part with that possession unless there's some inducement to part with it. And it is, although in the most of the history of interest has been denunciations of history of sort of usury exploitation, and that's not you can't discard those out of hand. That obviously in the ancient world, people slipped into debt and got into debt bondage and slavery via excessive interest, and that still happens in parts of the world today. However, there is an aspect in which if you lend a person part of your property and they benefit from it, you should have a right to share in it. Now, one of the things we've seen post the financial crisis, when interest rates were very low, is that well-connected people in the financial world were able to borrow from, if you will, ordinary hardworking peoples, taking the money from their, in effect, from their deposits where they were getting nothing, and then using that money to buy companies on leverage and earning vast fortunes in the process. So that seems to me, I argue that interest is always a question of social justice, a word we hear a lot about nowadays, a question of distributive justice. And the very low interest rates of recent years have, I think, affected a great injustice on the ordinary saving household.
So what you're saying is that people would put their money in a bank, and they wouldn't, or they would store it under a mattress, but they put it in a bank. That money's then accumulated by rich people who go off and invest it because they're smart, and then they return the money via some of the money back to the people who deposited their money in the bank via interest. That is social justice. Oh my God,
Yeah,
we found an
but
actual
Laurence, the
definition.
thing is, recently your savings yielded nothing until this year, and yet the people, the financiers, were able to take that money. It didn't yield the people who were using the money nothing. You could buy shares, or you could buy up companies that were earning, say, 15% returns, and borrowing the money at 2 or 3%. And so, as I say, that creates a problem. It's also, the less well off you are, the more of your savings you have to keep in cash or in near cash. But frankly, just in case you lose a job or something like that, and you need money for the next 2 or 3 months or so. If you're extremely rich, you keep a very small portion of your money in cash. So, and you can see it in the sort of inequality data. If you sort of look into it, you see that the richest people, not just the 1%, but the 0.1%, have ones who've done, particularly well in recent years. And you probably, have you heard of this French economist called Thomas Piketty?
No.
Does that mean Piketty had a sort of moment in the sun about 8 years ago when everyone was going on about inequality, and he wrote a book called Capital in the 21st Century. And Piketty argued that inequality increased whenever the rate of return was higher than the rate of economic growth. And when they had the Occupy Wall Street demonstrations, which also came to London, they used to have Piketty's. They often wore Piketty's formula on their T-shirts. R being the sort of rate of return, being greater than G. That was their sort of their maxim. But I argue that actually inequality comes about when the rate of interest, R, is below the rate of growth. And another thing I argue is that when the rate of interest is held down, you actually then also slow the rate of growth. And when you slow the rate of growth, you then slow the rate of income growth. So, households are less well off and therefore less capable of dealing with, less well off, period, really.
So what would be the ideal interest rate?
It's a good question. No one. You ought to have been an economist. No, no,
Don't they get
no,
everything wrong all the time?
I mean, what is the idea? So people talk about something called a natural rate of interest. The 17th century English philosopher John Locke discussed a natural rate of interest, and economists had this notion. But the trouble with the natural rate of interest is one cannot see it. I come back to the sort of judge's definition on pornography. I can't define it, but I know it when I see it, and what I would argue is that if we've never had interest rates below 2%, in 5 millennia, then an interest rate of 0% is definitely too low, and and an interest rate that buckles the economy is probably too high. So it's somewhere, the long-term average interest rate on a long bond has been somewhere in the range of 6%.
So
So
we've got so that you're saying that what the position we find ourselves in now is totally unprecedented. We've never lived through such long periods of zero or negative interest rates.
no, and actually, you've been noticing this year that lots of strange things. We've had inflation, after all the money printing during the COVID lockdowns. There we got the inflation. Then central banks started to raise interest rates from zero in the US and UK back to still relatively low levels by a historic basis. The Bank of England's rate is about 3% today, so which is half the post-war average. And already, you see around the world, stock markets have crashed, bond markets have crashed. You had, particularly severe crash in the UK gilts market that, in effect, brought down the short-lived government of Liz Truss. And this last week we've been having this sort of crash in crypto space. And actually, I mean, might seem incidental, but I don't. Did you notice that some Essex council turns out to be owed £550 million by a solar farm business? And you're thinking, why the hell was a council lending that amount of money? And that's because actually the councils themselves got into borrowing a lot of money when the money was cheap, and lending it willy-nilly. So, I mean, one of the definitions of interest is the price of leverage, of of debt, and everything else being equal, you take down the cost of leverage, people will take on more and more debt. So I think the system is massively over indebted and very fragile now. And one way you can see that is that, or express it, is that they talked about the financial bubbles of recent years being the everything bubble. I don't know if you heard that phrase. The idea was that anything you could choose to think about from an investment perspective, whether it was contemporary art or a vintage car or stock or a house, and fancy houses in global cities around the world, they were all in bubble territory. And now we have inflation and interest rising. We're sort of in the process of the everything bust, if you will. It's a sort of corollary of the everything bubble, or the denouement of the everything bubble.
So can we? That's amazing. Can we look at the two things that you mentioned there? The terms of the fact that we went from the 30 billion tax cut to now the 54 billion tax rise, and what happened? I mean, again, I have to plead financial complete ignorance, but as far as I understood it, The Conservative government, they're short-lived, as you said before we started recording, shorter lived than the lifespan of an iceberg lettuce of Liz Truss is government. Their plan was to go, right, we're going to go high growth, low tax. And that sounded quite good and almost conservative, I thought, for a minute there. And then it all went to hell in a handcart. Now, I'm a bit of a conspiracy theorist some of the times. And I thought this is the result of someone has intervened here and said, right, we don't want this to happen. We want it to be immoral to have lower taxes. It's wrong. We must make people suffer. Is there any truth to that, or why did the gilt markets crash because of Kwasi's budget?
I'm not really a conspiracy theorist. There's a term. Apparently, James Delingpole calls them non-conspiracy theorists cucks. I don't know what.
Yeah.
I think I'm. I think I'm a cuck.
Delingpole calls people much worse than that.
Yeah, he might have gone a bit further down the alphabet. But so what happened? It's all you have to consider the fragility of the bond market, which I'm afraid to say that Kwasi Kwarteng, who spent a couple of years working.
What is a bond? Sorry, just to interrupt. For those that don't know, what is a bond and what is the bond market?
Well, a bond is well, here we're talking actually specifically about the government bonds, and which we call gilts in England. And they're called gilts because they're meant to be gilt edge securities, as safe as houses, and they've been around really since the government bond market developed in the early 18th century. And Britain has never defaulted on its government debt since that period. And when a government runs a deficit, it issues bonds. What happened over the last 12, 13 years is first of all, I mean, the governments ran very big deficits after the global financial crisis to bail out Royal Bank of Scotland and the like. And then they ran, as you know, absolutely enormous deficits during the COVID lockdowns, the largest peacetime deficits in British history, as far as I know. So you had a big bond market with a large demands on the bond market by the British government. The British government debt went from 35% of GDP to roughly 100% of GDP from 2007. So it's tripled. However, the cost of owing to these low interest rates, the cost of servicing the government debt came down, and the Bank of England went out and purchased with its own sort of, by writing in effect a check, 850 billion or around 850 billion pounds worth of government bonds. The effect of that was to bring down the government bond price, as you can imagine, to bring down the cost of financing the government bonds, the interest rate on the bonds. But the price of the bonds went up, and at the same time, pension funds were told that they had to go and buy these long-dated bonds to match it for their eventual payments. So what happened is that these 50-year British government inflation index bonds last year were trading at negative 2% per annum yield. So you can see negative 2% per annum over 50 years is a pretty low interest rate. Now, the problem with
For
that...
how long, though? For how long? So, because it lasted such a short period of time, I mean, 55 days or something.
Wait, Laurence. So the thing is that those government bonds have been trading down at lower and lower and then negative yields for quite a period of time.
Okay.
And in general, it's sort of combination of the monetary policy, the low interest rates, the Bank of England buying them, and this huge demand from pension funds to buy these long-dated bonds. Anyhow, all it took was for the Bank of England to start raising its interest rates from, I think when the bond market crashed, when Truss was in power, the bank rate was only 2.25%. So still very low historical level. But that was sufficient to trigger a crash in the gilts market, where some of these bonds fell by 85%. And having fallen 85%, their the yield, they didn't default, so they were still good bonds, but their yield after falling 85% was only just above 1%. So you can see, and then you had, as they fell, the and I won't get into the details of the pension funds doing, they went into the derivatives market and blah blah blah, and they were getting these, they were basically losing a huge amount of money on these bonds, and then they were selling stuff because they needed to raise cash, and then they were, obviously went cap in hand to the Bank of England and said, unless you do something, we're stuffed. And then the bank went out and started, buying bonds again.
So what effect did that have?
Well, when the gilts market, bond market crashed, the mortgage market started, also having problems, and the 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 mortgage market started saying, well, we think that interest rates are going to be the mortgage rates are going to be 6% next year, from 2% at the beginning of this year. So that was sort of a tripling of of the mortgage rate. Now, households are much, people who buy houses take on much more greater mortgages, relative to their income, than they used to 30 or 40 years ago. I think the average income, I think the average mortgage relative to income is about 3.6 times today, whereas in the early 80s it was about 1.5 times. So you can see, that when the mortgage rates were going up, then you would stand. The UK housing market was on a precipice, and as you know, the Brits care about nothing really except their houses. And I think I'm right in saying that. I mean, this not only was the death knell of the Liz Truss government, but I think around this time, the Tories, lost any sort of they collapsed in the polls relative to Labour. So you could say that bond market crash induced a fundamental shift in political direction. And that's not me just making it up. A former Fed official, governor, Federal Reserve governor of the US Central Bank, wrote a piece for Bloomberg, 3 or 4 weeks ago, saying Bank of England was responsible for the change of government. It's pretty interesting stuff.
Would that be called? I mean, would the Bank of England be part of what someone like Trump would call the deep state? Sort of unelected people who are deciding on how the country is going to be run, regardless of how the demos want the country to be run. Would that be a
I
true
mean,
statement?
you could. I think what happened, you see, in the old days, well, at least from Second World War up to 97, the Bank of England, interest rates. So the Bank of England wasn't really independent of the UK Treasury, and the argument against that was that was an inducement for politicians to keep interest rates too low at times of inflation, and that would and that Britain had a very bad inflation record in the 70s and into the early 80s. So on paper, it seemed like a good idea to give independence to the Bank of England and to have monetary policy makers set by a group of technocrats. But reality is not what works on paper. I think the reality is that you put technocrats in charge who conducted a monetary policy with a very narrow focus on their remit to control inflation, and didn't consider the broader consequences of their monetary policy, of the lowest interest rates in 5 millennia, that the impact that had on productivity growth, on inequality, and on financial fragility. So I think one of the things that has happened, you know, I mean, I don't know if you want to call it this deep state or not, is that politicians have tried to sort of slough off responsibility for making decisions, whether it's to quangos or, in the old, before Brexit, to the European Union, or in this case, in monetary policy, to the, to the Bank of England and the Bank of England Committee. But then there's no real accountability. The Bank of England hasn't, there's no responsibility for what's happened, and I think that is quite troubling. I do think it also means that the politicians themselves, so busy sort of, you know parading themselves on Twitter or whatever, have lost interest in what is actually a sort of vital aspect of economic and financial management. So the corollary of that is is the political class actually losing responsibility and accountability.
Which would be exactly the same, that sort of myopic one way looking at things as the lockdowns, which so the country was essentially run by a bunch of sage modelers. And
Exactly, and it's very, very similar in a way. You have, I mean, needless to say, the monetary policy makers are all mathematical economists who have their models. The models themselves don't describe the real world, but once you get lost in your models, you then get a sort of, if you will, group think about the model. So everyone adheres to the model. You don't employ anyone and you kick anyone out of the room who disagrees with it. Then you get these problems of, cognitive dissonance, where stuff that just, might tell you that things are wrong, you don't pay any attention to it. So I've always thought, yes, that in a way the monetary policy prefigured the lockdowns. So,
hello, doggy. Woof woof.
that's my dog Merle.
Um, that okay. So in terms of what I'm picking up and what you're describing is we're on the very limits of what people can actually believe in anymore. Because I mean, as money is to a degree a social construct, isn't it? But we're kind of on the very limits of what we can believe in, and then that takes us to crypto or not. What
Yes,
do you think?
and I mean, again, your point, money being a social very. I think you are a natural economist. Actually, I mean,
I'm going to
it's a
sign up.
it is a social construct, or a social network, if you will.
Mm.
And there are those who believe that the state is taking greater and greater control of money, because around the corner we've got these central bank digital currencies. And the problem with the central bank digital currency is that the state, the central bank, could actually see every one of your transactions throughout the course of your life. And in China, they're merging it with a system of what's called social credit. So in effect, in China, the state can determine whether you can get on an aeroplane or a high speed train. So one has a sort of dystopian vision around the corner, and people raise the cryptos as an alternative.
Mm.
Trouble with cryptos is, in the everything bubble I described to you, nothing bubbled quite like crypto. I mean, to my mind, it's a bit like, it's a sort of digital casino where you go in, you hand these guys, some hard-earned dollars or pounds, and they give you little tokens, and then you go out and gamble with the tokens. And as long as more people are coming into the casino, the tokens rise in price. But when they go out, they fall in price. Or as we've had recently, what looks like a tremendous multi-billion-dollar fraud in the US with in the Bahamas with one of the largest crypto exchanges called FTX. And so the trouble with crypto is in theory at some stage someone might come up with a cryptocurrency that is actually an alternative to a sort of government controlled digital currency, but we're not there yet. We're just in these the crypto world is just early bubble bubble crooked world, and that's what's sort of imploding. Sort of
I'd be
as we
terrified. I'd be really terrified of that though, because I mean, I went into a pub the other day and tried to pay with cash for a pint, and they said we don't accept cash. So that made me go, oh God. But especially with this growing and seemingly again completely one-sided debate over stuff like climate, that you might very well, if the government had a central bank digital currency, they might say, look, we're going to have to ground all flights for certain types of people. Or if you bought 4 sirloin steaks on Sunday for your friends, you've done enough carbon damage, so your carbon credits are coming off your social
Yeah,
credit
yeah.
score.
I mean,
And
you can go. I mean, it's very worrying. The Friedrich Hayek, the Austrian economist, um, he wrote that in his book, The Road to. Have you read The Road to Serfdom? I
no,
think you all.
yeah, bits of it.
Yeah, I mean, so I actually end my book on the new road to serfdom is the last chapter, about the concerns that the central banks taking over, and as capitalism ceases to operate, the governments then step in and so forth. Now, Hayek says in The Road to Serfdom that money is the greatest invention for individual freedom ever. Now, these central bank digital currencies, when you combine them with the type of data that is collected on the internet through social networks and so forth, they have the capacity to be the greatest instrument of social control you could conceive. I mean, they would make the totalitarian societies of the past look, positively liberal.
Yeah.
And I have to say, I think that is why some cryptocurrency at some stage probably will establish itself, because we will need a way of transacting and interacting outside of these central monetary
Uh,
system. I mean, and
like
also you saw what happened to Toby Young, with PayPal the other day, how they cut him off his personal accounts, Free Speech Union, Daily Skeptic, and on the grounds that, frankly, they didn't care what Toby was saying or doing. But Free Speech Union, doesn't it sound a bit weird that you're cutting off a free speech union for harmful activities? So yeah,
mm,
I think I've done a lot of, my earlier work was on speculative bubbles, and you tend to get bubbles with new technologies, and then bubble, subsides, and then out of the wreckage comes something. So perhaps out of this sort of crypto wreckage, yeah, that something
will
will emerge.
like a digital black market, do you think, or something more
Well, I mean,
formal?
it wouldn't it wouldn't necessarily have to be digital black market, but so the trouble with our modern monetary system is money is just created by fiat. By central banks can create money, banks can create money just by acts of making loans, and a central bank digital, a proper cryptocurrency, if it were functioning, might it would limit the supply of money, and therefore you go back to your earlier question: what is the proper rate of interest? Proper rate of interest is one in which money is a finite quantity, and the cost of borrowing money is actually a market transaction between the owner of some money and the person who wishes to borrow it. So you can conceive of, again, a private money. cryptographic, in which interest rates are set, so to speak, in the market. The trouble is that recently there have been a lot of crypto lenders, but they all turned out to be Ponzi schemes. So,
Yeah.
I mean, again, it doesn't, and they're all going bust this year in what's called the crypto winter.
So they would have to be, so a fully functioning crypto system would have to operate in the old system that you're describing, where there's a finite amount of cryptocurrency, as opposed to what you're describing that we're living through at the moment. Is it called modern monetary theory? Is that the correct thing?
Yeah,
Where
I
you
mean,
just
no, I mean, what we're living for at the moment is called
madness.
is called a fiat money system. It's not
Yeah,
back. Money's not backed by anything. It used to be backed by gold. You used to be able to go along to Bank of England, hand over your note and get a fixed quantity of gold. We now live. You can't redeem your banknote in anything. Some people say that Bitcoin, the first of the cryptocurrencies, because it is limited supposedly in issuance, and it can only increase issuance if by burning a lot of electricity, in short. That is a sort of type of digital gold, and it may, and another other people from your purposes tout the blockchain of Bitcoin as a way for communicating and keeping records, digital records that can't be actually changed by state actors, by if you will, your sort of totalitarian power. So in that sense, they sort of do. It does contain within itself this sort of germ of freedom, which we probably are going to need going forward.
very much going to need going forward, I imagine. So, what do you predict coming for us in the next? To me, I always operate on instinct, so I just predict. I'm looking at things going. The Tory party are toast. The Labour Party are now the party of low tax, and they're willing to get involved in National Health Service. Everything's gone upside down. The Tories have basically got, I think, political dysmorphia and transitioned into something completely different. What do you predict is going to happen financially and therefore politically? Because I mean, money makes the world go round, doesn't it? So, what do you see coming?
Well, I mean, I pointed out to you what I think is this fragility in the system after these years of easy money and of government spending those huge sums on the lockdowns. And I think this is not just a British problem; it's a global problem. So I think that that the unraveling of these fragilities and these misallocation of capital, call it what you will, is going to take a while. And I would be very. I think it's conceivable that we could, yeah, that over the next 2 or 3 years is going to be hard times, regardless of what the government does on the tax front. So yeah, I think you're probably right. The polls say Tories are toast. Tories sort of know that they're toast because they're all spend most of their time sticking their knives into each other's backs rather than actually thinking about how to govern.
So we've got two years of difficulty ahead as things rebalance themselves. At the very least, a nasty, very long winter of discontent coming. Is that what you're saying? Yeah.
Probably.
Oh Lord, what can we do about it?
Um,
Where's our? Should we be following the telling polls of this world, going get your cash out, only spend cash?
well, I mean, I'm quite bullish on gold. Actually, I have to say. I'm not. I think it's too early for crypto, and cash is just cash. I mean, cash is fiat. It's just made up. And a hedge fund manager I know, most successful hedge fund manager in the States, um, called Paul Singer. He wrote a note that the FT published the other day, where he's sort of warning of high hyperinflation around the
Yeah.
corner. I don't know if that's likely, but actually Singer was the guy who called the subprime crisis actually spot on, long before it actually blew up in everyone's face. And so you don't want to
Hyper,
be, you don't want, Laurence, you don't want to be wheelbarrowing your. Yeah, I think I have to say I think that gold gold has been around. Well, actually, I was going to say as around as long as interest, but actually, in the Babylonian periods, they used silver really as money. So gold came a bit later. But gold, a friend of mine who's a financial historian says gold is the world's oldest bubble. So I think that, and gold is actually relative. It's not cheap or expensive. You can measure gold relative to uh, loaves of bread, 350 loaves of bread per ounce. You can measure it relative to oil, roughly sort of 15 barrels of oil to an ounce. And you can measure, another measure is a gentleman's suit. The cost of a gentleman's suit should cost you roughly an ounce of gold. And I don't know how much, a bespoke suit costs now, perhaps quite expensive. But on the other measures, gold looks fair value. So I have to say that over the coming years, I think that's probably the safest store of value.
And that gold then, there's a gold shop over the road, and I wander past it, looking at it wistfully. So if I was to take my wad of cash and go in there and get that piece of gold, would I then take that home with me to buy a suit come the apocalypse if I wanted to look nice?
You might be able to pay your heating bill in 10 years' time.
But are we not facing this perfect storm? We've gone through the conversation. We've got a generation of hopeless young people who can't afford things. We've got historically low interest rates. We've got quite a lot of inflation already. So everything's becoming less affordable to them. They're all being told that it's the climate and that the climate is the next new catastrophe, having been raised on catastrophes, this generation. Are we not looking at? I mean, we could be looking at. The lockdowns taught me one thing, which is that mankind can turn on a sixpence. Could that be coming our way again? Could we see a complete breakdown in Western society? Is it possible?
Yeah, I mean, yeah. So, I mean, I think probably had similar thoughts to you about lockdown. It's very demoralizing, and you know, well,
And
going back to
pointless, and no
Laurence,
one's talking about them.
oh, I don't have that. I'm actually. I'll send you. I spent some time, right at the beginning of the lockdown, so I actually tried to analyze what was happening. I wrote a piece for Reuters Breaking Views, where I write a column saying this is an inverted speculative mania. Most speculative manias are irrationality driven by greed, but here's an irrationality driven by fear. I
Mm.
put that out sort of, I don't know, 20th of March. And if I look back on it, I wouldn't change a word, not least, noting how unreliable the epidemiologists were. They just have, again, their spreadsheets with their sort of fantasy data. But yes, are we on the verge of of societal collapse? I don't know. It really worries me, and I'm not a person who generally would have worried. I followed that from forget about the lockdowns, forget about climate transition, energy transition, which is a remarkably you know difficult thing to achieve. But leaving those aside, just from the work in the financial monetary work, you saw a system moving closer and closer towards the precipice, and that was before you had any of these other concerns. So yes, I think that is, I have to say it's very problematic.
But I think on the optimistic side, you seem to point towards the fact that what human beings are irrational. The marshmallow test, all of this stuff. They want things quickly and fast, but they rely on on history and time and the value, as you say, of gold. So could the thing that stops us heading towards a extremely difficult time be optimism, be hope, be looking at our country as a place where we could
Now I don't know, Laura. No, I don't. You can't just sort of be like sort of Dorothy in the Wizard of Oz and close your eyes and kick your heels together and think everything's going to be fine. That's sort of Boris Johnson boosterism. Boosterism doesn't do anything.
Yeah.
Uh, the I think really, what can I mean, one needs some way of reconnecting our society to common sense, and that common, and then really frankly, once you have common sense directing things, then a lot of these problems sort of begin to they're not insurmountable, any of them really. So, and that probably does require quite profound political change.
And it requires profoundly freedom of speech and the Free Speech Union not to be shut down, and anybody else. I mean, we just on a sort of final and weird personal note, we can't get a bank account. They won't let us have a bank account. The Reclaim Party, they refuse.
Yeah. But
We
that
keep breaking.
didn't. Yes, and then they forced. The same happened. In France, didn't it? So you then get people then forced to have dodgy dodgy Russian Cypriot, and then they say, "Oh, look, you're a Russian clone." It's like, yeah, no, that is problematic. Well, you better get yourself a Bitcoin wallet then.
I've got one. I've got a Bitcoin wallet, but whenever I open up my Coinbase account, I look at it and I go, God, I feel sorry for my friends who've got huge amounts of money invested in this stuff. I never quite bought it. But can I just say thank you hugely, because you've managed to explain to me, and I put myself sort of on the not very good with money side of things, and I understood absolutely everything you've said, and I think it's been really, really helpful, and everyone who watches will now know as much as I do. And you've been so generous with your time, Edward. Thank you.
And they will buy my book, no doubt.
I will buy your book. Go and buy Edward's book. The
Thank you.
Price of Time, available in all good bookshops now, and on
Yes,
Amazon, possibly.
yeah,
Is it on Amazon, or is Jeff
yeah.
Bezos taking it off there?
It's on.
Edward Chancellor, author of The Price of Time. Thank you so much.
Thank you, Laurence. Bye then.